So it's Thursday again. Let's talk about some legacy charts. Let's talk about DXY, NDX, SPX, gold, silver. Unfortunately, these things matter relative to crypto because they have moved together recently. Although that may be coming to an end, as I'm about to show you in the data here. If we look at the VIX, which is a volatility index, the fear index, as it's perhaps more well known, if the VIX is going up, usually there's something going wrong in the world, i.e. coronavirus or what have you. If we look at what happened with the VIX in early 2020, once the coronavirus stuff set in the United States, VIX spiked, BTC dropped with everything else in March. So if you weren't paying attention to what's going on outside of crypto, you might have said to yourself, wow, this was quite an unusual event in March, when in reality, it was a big risk-off event across the board. Since then, both legacy and crypto have bounced substantially. If we look at the 30-day correlation with the VIX, this panel here, you can see how negative the correlation has been, almost 100% for a large period of time, which means if VIX goes up, BTC goes down. So a way to quantify what I'm saying here as far as the correlation. Over the past few days, as coronavirus second wave stuff, third wave stuff is hitting not only the US but globally, VIX is again rising, but this time BTC has not declined, has not correlated with in a negative way thus far. So to me, this is even more bullish for BTC, because if that negative correlation breaks, then it says that we're decoupling from whatever's going on in the world, which is the ultimate dream for BTC, for crypto markets in general. It's really best if we're not coupled with anything, if we're not risk on, if we're not risk off. We are just a deflationary asset doing our own thing. So VIX up should be bearish for Nasdaq, SPX. It's looking like it's been bearish for gold, which is a bit of a surprise, but if gold is in this risk on mode right now versus the safe haven counter USD trade, then gold will decline with everything else. Again, if we zoom out on the VIX, historically there really hasn't been like any strong correlations. You could argue maybe again in early 2018 there was pretty substantial correlation with VIX for a long period of time. But other than that, really there hasn't been periods like that we have now where VIX has been so negatively correlated with BTC. If we look at the 90-day rolling with DXY and gold correlations, DXY here, gold here, as I've said in the past 3 or 4 weeks now, we've never had as strong of a negative correlation with DXY and as positive of a correlation with gold as we currently have. So to see all of this even slightly declining is bullish, I think, because if VIX is rising, DXY's rising, gold is falling, historically that's bearish for BTC, but if we're breaking that correlation now, then again, we're just doing our own thing. We are bullish regardless of what's going on in the world, regardless of who gets elected president in the next few weeks here in the United States. Whatever's going on, doesn't matter. If the true test is if VIX spikes beyond 40, beyond 80, what happens with, let's say there's a civil war unrest situation in the United States, VIX spikes past 80, what happens with BTC? That'll be an interesting situation for a variety of reasons, but if BTC can maintain its bullishness throughout that, then we're definitely talking all-time high levels for price at that point. If we look at Ethereum correlations again, SPX, Nasdaq, 30-day, relatively positive. That is also falling off in recent days as well. Ethereum's kind of pooped out here. It kind of hasn't really done much. Any high has been batted down. Anything above 400 has been batted down. So Ethereum's definitely doing its own thing recently, relative to BTC, especially if you look at that pair, but the correlations with legacy are falling off there as well. And here's BTC again with SPX and Nasdaq correlation 30-day rolling almost zero now for both of those, which is what I want to see. I would love to see this go negative, way negative. That says anything we've had correlation-wise over the past year to date is completely gone and nullified, and we are definitely dancing to the beat of our own drum at that point. Looking at gold specifically with the cloud and some trend metrics, it had this insane parabolic rise over the past few years. Trend-wise, it looks like it's definitely neutral to bearish here, arguably an inverted cup and handle. This looks like it wants to revisit 1750, whatever the weekly Kijun is, yearly pivot here. This does not look bullish at all. Another reason it's good to decouple there. Silver also looks like it's got this inverted cup and handle situation. Decent size retrace to 21. Wouldn't be surprising for me based on technicals. I don't see it breaking below 20, breaking below 18, 19. That's unlikely based on previous white coffee and accumulation. SPX looks like it's double topping. I don't think it takes a rocket scientist to see that. Last week I was talking about this bullish TK recross above the cloud, which looks like it's been nullified in recent days. And there's currently a struggle between bearish continuation with the M double top versus a bullish divergence here on the recent local lows. So if this low can hold, it's actually pretty bullish, despite what it looks like on the chart because of the momentum. It says that even though momentum is more bearish than it was previously, price did not break those lows. So that is a bullish divergence. To counter that, we also have this edge-to-edge situation, which would fulfill the M double top as far as a retrace to 3100, something like that. So not a clear picture here. I don't think this is going to be clear until after the election results are completed, which may take 2 months at this point, depending on the margins here. But we're in for a bumpy ride, certainly by towards the end of the year here. Nasdaq also a bit of an M double top. Again, this bullish TK recross above the cloud kind of did nothing thus far. Also a bullish divergence, also a building edge-to-edge situation to 10.6. But if this bullish divergence can hold, I do think this goes for higher highs here. You could also draw this as a triangle and figure out the trade setups from there. But it's undeniable that we're not in this insane bullish momentum situation again. I do think regardless of who gets elected, we will get a stimulus in the US again that will roof SPX, it'll roof Nasdaq, gold, silver are going to boom. BTC should boom as well with all of that. And Dixie should go to new lows below 90, 91, potentially 88. Again, right now this looks like a garbled mess because it looks like it wanted to reverse the bear trend with an inverted head and shoulders. That was denied. It had a chance for an edge-to-edge trade on the cloud to 96. That was denied. Now that looks like it's back on the table. So a whole bunch of just complete volatility, random walk. Definitely not a trend here. I mean, you can just see the range that it's been in for the past few months. But if Dixie declines, it should be bullish for BTC. If Dixie goes to 96, that is likely more bearish. But if we are decoupled as we currently look like we are from everything, that may matter less and less. We may just be in our own bubble, crypto bubble once again, which would be much better than correlating with anything going on in legacy markets.